Hi, this is Zach Meir from Master Investor with a look at some bulletin board hero stocks on Wednesday, the 11th of March. I'm starting off with AFC Energy, where there was quite a flourish for the shares to the upside yesterday through 14 pence towards the 200-day moving average at 15.323 pence as well. And not surprising given the extended rising trend line here from November in the RSI window, double tested over the recent past. That's frequently a decent leading indicator on the upside. And the view at the moment really is that while we hold above this unfilled gap through the 50-day moving average at 91.14 pence, we should see a retest or even a break of the latest spike that we've seen in the 14 pence zone over the next couple of weeks. This stage only an end of day close back below the floor of the gap, 8.9 pence, and the floor of this channel from October would be outright negative. Next up is a stock which I looked at a few days ago, a little while back, and there's been a pullback from the best levels. It should have been the case that the shares sort of stayed up and remained with the advantage on the bull side after breaking through the 50-day moving average. But we've come back to test that as support. That's at 0.54 pence shown here in blue. That's also the floor of a rising trend channel from October. The price action is backed by a rising January RSI uptrend line, and there's been a double bounce off that, which should be enough to take the shares up on this occasion or over the next few days in the form of a V-shaped bull flag. The upside here as high as the October resistance line projection of 1.2 pence, initial target, the 200-day moving average just under a penny. Quite a splash made by IGas yesterday. Looks as though the bulls have been at least rewarded in some way after the punishing treatment they've had over recent months. We're trying to spike through or peak through the 50-day moving average. I would like to see an end of day close back above that at 29.42 before getting too excited about the situation. There's still resistance coming in from the 50-day line and also a line that you can draw from December like that. So really 30 pence plus is what we're looking at for IGas in order to feel safe. And the sell into strength, a mantra that we've had over the past couple of months, remains while we stay below the 50-day line in particular. Optare is the next stock on the list, and difficult to resist looking at this, even though it's obviously very volatile and rather thinly traded stock, on the basis that we've got this massive unfilled gap to the upside through the 200-day moving average at 0.18 pence. That's now the end of day close stop loss on the buy argument, and while we remain above the 200-day line, we're looking for a top of 2013 price channel target as high as 0.4 pence over the next 1 to 2 months. The ideal scenario is that we don't really fall back too much below the 0.2 pence area, which was really resistance in October, November last year. So encouraging here at Optare once the RSI cools off a bit from the very overbought 88 pence over the next few days. Touchstone Gold, difficult to avoid at the moment, given that it does look as though it's starting to push back up again. Basically a W-shaped, it looks like a W-shaped reversal over the past few months since October. The ideal scenario now, really, after yesterday's strong candle, which basically saw the shares open at the low and close at the high, is a decent weekly close above the 200-day moving average at 0.52 pence. Above that, one would expect quite a fast flip to the upside, as we saw the last time the 200-day moving average broke in December. And that would target towards 0.9 pence again, which is the late 2014 resistance. The other added bonus is the way that the RSI is broken up through neutral 50 to stand at 55, which is normally a decent short-term bullish indicator. Finishing off with UK oil and gas, which was requested yesterday. Shares price action rather slow still, but higher support for February and March versus January and December, so that is a plus point. So it's sort of slowly building again. See the RSI, the 200-day moving average rather trying to push up as well. That's 0.81 pence, and that's the initial target here, especially while we hold the 20-day moving average at 0.55 pence. As you can see, there's a golden cross coming in between the 10 and 20-day moving averages at the moment, which is encouraging. Weekly close back above February resistance at 0.64 pence would be probably the best momentum buy signal here to target the 200-day line initially, and then a possible top of October price channel at 1.25 pence for the next or the following 1 to 2 months after we clear this initial resistance. That's it from me. More updates at masterinvestor.co.uk.